All right. Good morning, everybody. Good morning, all you wonderful people out there, and happy Monday. Today is June 26, 2023, and I am on vacation. In case you didn't notice, I am currently at an undisclosed location, but the show must go on. There's things happening in the world today, so we're going live anyway. We've got PacWest Bank is back in the news today. Remember, you may recall PacWest was widely considered to be the next bank to go down back in March and then back in May as we were having the regional banking crisis. Well, they're back in the news today. They sold a $3.5 billion portfolio of loans made up of things like auto loans, consumer loans, small business loans, real estate, packaged it all up into one big block, and they've sold it. And they sold it for, it's unclear what they're getting from it. The story is saying $2 billion that they've raised with this deal, but I saw some stories mentioned it was a first tranche for $2 billion. So it's unclear whether or not they're making a profit or taking a loss on this. I'm guessing they are going to take a pretty substantial loss on this deal because interest rates have risen since most of these loans were issued, which usually devalues the principal. But still, it's unclear whether or not they're making a profit or not. Keep in mind, they sold a $2.6 billion portfolio of loans a few months ago back in May. They took a $200 million haircut on that deal. So PacWest is selling off their assets. They're raising capital. This helps them to better meet withdrawals. It strengthens the bank's position. So PacWest stock is rallying this morning, but at the very least, they have been able to find a buyer. Elsewhere, we've got Blackstone is in the news this morning. Blackstone just sold $3.1 billion worth of industrial real estate space, namely warehouses. Now, Blackstone has also been in the news a lot. Since December, they have halted withdrawals from the Blackstone Real Estate Income Trust, or the BREIT, which is one of the biggest real estate investment trusts in the country. And for the better part of 6 or 7 months now, people have been trying to withdraw their money from that fund. And Blackstone has been saying, no, you can't have your money back. There's clauses in the contracts for these funds where they can limit withdrawals in order to prevent the fire sale of assets in order to meet those withdrawals. Well, Blackstone just sold $3.1 billion worth of warehouses. So does this mean they now have to cash to open up the exits and let some of the people out of their fund? We'll see what happens. But in six or seven consecutive months, they haven't been letting people out of that real estate income trust. Now, that was industrial warehouse space. That was most likely sold at a profit. Again, there's not a lot of details in the story about whether they made money or lost money on the deal. But warehouse space is one of the few silver linings in the real estate gray cloud right now. That's done pretty well. So it's a good bet Blackstone actually made some money there. But either way, guys, there's a lot of deals happening this morning. There's a lot of money changing hands. But you know what? There's not a lot of changing hands is oil. Saudi Arabia, there's a story coming out that they're storing oil in tankers in the Red Sea, that they're just putting it in the boats, and the boats are just sitting there. It's eerily reminiscent of mid-2020 when oil prices went negative. Now, we're nowhere near the scope or the scale of the problem that we had in 2020. But when they're dumping oil into tankers and just letting it sit, that's not a good sign about a healthy oil market. And remember, the lag in oil prices and the production cuts in Saudi Arabia and Russia and the lack of a market reaction to those production cuts is one of the reasons why I've been very bearish about the whole global economy. When you see it in the oil markets, it soon spreads to everything else. And we got more of that today. And with that, I have to say thank you very much to the sponsor of today's live stream, Patriot Gold Group. You know, guys, we are on the brink of a global recession, a big slowdown in trade. And when that happens, priority number one needs to be capital preservation. And there is no better way to preserve your capital, no better way to save that spending power than through the ownership of physical precious metals like gold and silver. And that's why I like Patriot Gold Group. They're a Consumer Affairs rated top IRA, gold-backed IRA dealer for 6 years in a row. So call 888-988-5401 or go to nsfgold.com. There's a link down below in the description if you want to check that out. And, of course, always tell them that nobody sent you. And with that, let's shrink my big melon of a head and see what's going on in markets today. We have got the Dow is currently down. Oh, I'm sorry. The Dow is up 6 points. Look at that. A green candle this morning. Barely 0.02% at 33,734. We've got the S&P is up an entire 2 points or 0.04%, trading at 4350. And the NASDAQ is up 1.5 points, 0.02%, 13,495. So a whole lot of nothing happening in the stock market this morning. The DXY is down about 23 basis points at 102.67. We've got a slight weakening in the dollar. And looking at yields, it looks like we got yields are higher on the short end of the curve. The 1 month is up a fraction of a basis point. We've got the 2 month up 6 basis points. Then on the long end, we got yields going a little bit lower. We've got the 10-year is down 8 basis points. The 2 years just barely positive, up 3. So we've got a little bit more of an inversion in the yield curve going on this morning. And looking over in the commodity space, we've got gold is up $6 this morning at 1,935. That's up about 1/3%. Silver is at 22.69, having a good morning, up 33 cents or 1.5%. That's after the bludgeoning silver got last week. So clawing back some of that this morning. Oil's been all over the place this morning. It's currently about flat, up 17 cents, 1/4%, trading at 69.33. And we've got natural gas is up 7 cents. Guys, in the commodity space, I don't want to spend too much time on what's going on in Russia. But obviously, big story out of Russia this weekend, the coup or whatever you want to call whatever that mess was going on in Russia. It appears that some of it, or at least the initial wave of it, is over right now. We're not going to spend too much time on it, but this is a finance channel, so be aware of what's going on in there. And, this could have a big effect on oil prices, and this could have a big effect on food prices. Russia is a big exporter of both of those things, so it's something to keep an eye on. But there's no shortage of coverage of that in the other channels. And right now, there's just so much noise on the subject that we're just not going to get into it for the time being. But what we are going to get into is this story from Saudi Arabia in Bloomberg this morning. Saudi Arabia's stash of oil in the Red Sea is driving up global floating storage. This is from just this morning. The amount of oil being stored at sea globally climbed to the highest in more than 2.5 years, aided by an unusual stash of Saudi Arabian barrels in the Red Sea. About 129 million barrels of crude were sat stationary on oil tankers in the week ending June 23rd, according to data from Vortexa, an analytics firm. That's the most since October of 2020, and storage volumes in Asia hit an 11-month high last week, while those in the Middle East were the highest since January. Now, again, you can look at this chart. This is showing crude oil floating. It's a little hard to see, but we are nowhere near the levels we saw in the middle of 2020 as far as the amount of oil sitting in tankers. So I don't want to, I'm not saying prices are going negative or anything like that right now, but this is bearish for oil prices. And they also snuck this in. A lot of times you find the best little tidbit of information in the last paragraph on a Bloomberg article, and that is the case again this morning. While floating storage has been increasing in recent weeks, the total volume of oil at sea, which includes barrels in transit, that's actually falling. And that's because oil being transported has declined. And guys, that right there, that is almost more of a bearish sign than that whole bit about the oil going into storage. The fact that there is just not oil being transported right now. It's not flowing across the ocean. The tankers aren't moving. Guys, trade is slowing. Recession, global recession is coming. You can see it in the oil markets, and if it's in the oil markets, it touches everything because everything has an energy footprint. Just taking a look at oil prices here, we've got the price of WTI crude. It's currently at $69.25, trying to put in a floor here in the high 60s. We've bounced off it a couple of times. And, the fact that oil is not being transported as much and that it's sitting in tankers in Saudi Arabia, and then factor in these price cuts and the lack of a market reaction to these price cuts from OPEC Plus and Saudi Arabia. Guys, these price cuts are not offensive. These aren't Eastern powers trying to stick it to the United States. These are defensive moves by oil exporting countries to try to support prices at these levels. And that's why the market has shrugged this off. Oil production is being cut because there's not enough people buying oil. That is a very big deal. Moving on, let's take a look at the PacWest story. PacWest Bancorp stock jumps as Ares buys $3.5 billion worth of loans. PacWest Bancorp shares rose early on Monday after the lender sold a $3.5 billion portfolio of loans to Ares Capital. PacWest jumped more than 7% in pre-market trading, but remained down more than 70% over the past year as the lender came into focus amid turmoil. The portfolio acquired by Ares, an alternative investment manager, includes consumer loans, small business loans, timeshare, auto loans, and others. Ares stock was little changed before the market opened. The transaction will improve our liquidity and capital as we continue to implement our announced strategy to return our focus to relationship-based community banking. Well, isn't that just a wonderful feel-good statement? So they're talking about how they sold the sale of the loans, takes some risk off of PacWest books and generates some $2 billion before transaction costs for the bank. So on an initial glance, it looks like they're selling $3.5 billion worth of loans for $2 billion. Now, that would be a massive, massive loss for PacWest, obviously. So I think there's some information missing. This story just hit the tape, a few hours ago. So, the coverage is somewhat lacking right now on this one. I saw some other articles and other outlets that referred to the $2 billion as a first tranche, meaning the first wave of this $3.5 billion. So I still don't know, is PacWest taking a big loss, a little loss, or are they breaking even on the deal? My guess is they're going to take a loss. Maybe not that big. I mean, if they had sold this for $2 billion, a $3.5 billion loan book, the stock would be just absolutely in the toilet right now. And that's not the case. Let me refresh the window here. PacWest is currently up 7.3%. So I'm leaning towards the first tranche story that there's probably another sale coming on the horizon and that they're not taking that big of a haircut. But I just want to remind you about this one from back in May. And this is on May 22nd. PacWest shares jump after $2.6 billion real estate loan sale. Again, this was back in May. PacWest jumped on Monday after a troubled regional lender announced that it had agreed to sell $2.6 billion worth of real estate and construction loans at a discount in a bid to improve its balance sheet. And where was the number in here? They talked about it. Well, they took a $200 million hit on that deal. They sold $2.6 billion worth of real estate loans for $2.4 billion back in May. So I'm guessing that they're going to take a similar hit on this $3.5 billion worth of loans. I just don't think there's more to this story than is being initially reported as far as that $2 billion price tag. As soon as we get that information, we will bring it to you. But that's not the only deal happening this morning. Check out this one. Prologis buying $3.1 billion of industrial property portfolio from Blackstone. The demand for warehouse space remains strong from online retailers. Prologis has agreed to pay Blackstone $3.1 billion for a portfolio of U.S. warehouses and distribution properties in a sign that industrial space remains one of the strongest property types in the shaky commercial property sector. The portfolio includes 14 million square feet in about 70 properties in major markets, including Atlanta, California, Dallas, South Florida, Washington, D.C., and New York region. So these warehouses are all over the country. The all-cash deal, which is one of the largest commercial real estate transactions of 2023, is expected to close by June. So this is a big deal going on here. Investment giant Blackstone, they're also a major investor in industrial real estate with a global portfolio valued at $175 billion, continuing to buy warehouses and distribution centers. The assets it's selling to Prologis are held by Blackstone's opportunistic funds, which typically sell properties after holding them long enough to increase in values. So the question is Blackstone going to open up their BREIT fund now that they've raised some $3 billion selling off these warehouses? Are we actually going to get the doors open to their BREIT fund, or are they still going to trap their investors inside? And, if this investment is so good that you're not allowed to sell, the chances are the investment really was never that good to begin with. So keep an eye on this one. The fact that these are still selling at pretty high prices right now, this is not a fire sale. That's the one point I want to make here. It looks like Blackstone is actually making a profit on these. The loan book from PacWest, maybe not fire sale prices over there, but they are going to take a haircut. This one looks like a profitable deal for Blackstone right now. Although warehouse spaces, that's one of the few areas that you actually can still make a profit in commercial real estate. Office space, residential, retail are all just in the doldrums right now. So things not looking too good over there. And the last one I want to talk about, guys, another one, this kind of feeds into the oil story and the story coming out of Saudi Arabia. China's economy gloom worsens with weak consumer spending data. Travel spending over a holiday falls short of pre-pandemic level. And state media floats more monetary and fiscal options for Beijing. In other words, more stimmies coming from China. More stimulus on the way. China's consumer-driven recovery is showing more signs of losing momentum as spending slows on everything from holiday travel to cars and homes, adding to expectations for more stimulus to support the economy. Domestic travel spending during the recent holiday for the Dragon Boat Festival was lower than pre-pandemic levels, according to official data released this weekend. Home sales figures are below the level in previous years, while estimates for June car sales showed a drop from a year ago. And I just want to add this part. The holiday tourism data pointed to fading post-COVID recovery momentum for in-person services, according to Lu Ting, chief China economist at Nomura Holdings. He wrote in a Sunday research note, he noted that average spending per trip was about 16% lower than in 2019, implying a weaker intention to spend or less purchasing power. What has anything gotten cheaper since 2019? Anything anywhere in the world? So if people are spending 16% less, that's nominal numbers. They're spending 16% less on their travel in China than they did in 2019 before this whole inflation mess got started. That is a very recessionary indicator right there, guys. Travel is usually the first thing people cut back on when things get tough. So this China recovery, guys, the story of, China's going to reopen and the post-COVID wave and it's going to stimulate the global economy. Not happening, guys. It's just not happening. It looks like things continue to get worse in China. And with that oil information coming out of Saudi Arabia, oil sitting in boats, not moving across the ocean, that supports that things around the world are slowing down. All right, guys, that's all I got for you today. I'm heading back to vacation, but I will be with you every morning this week. So just want to say thank you very much to everybody for your time. Thank you to Patriot Gold for sponsoring this video. Thank you to my Patreon supporters for everything you guys do for the channel. There's links down below to both of those things. Hi, Mom. Hi, Dad. I'll see you guys in a couple minutes. Till next time, live small and dream big.